Hello riders, welcome back to our channel. Today I'm going to show you how to use the RSI, which is a very powerful tool that can improve your trading results dramatically. Also, if you're new to the channel and you want to stay updated with the latest trends, strategies and tips and want to see more tutorials like this, make sure to hit that subscribe button. So let's go straight to the charts. Alright guys, I'm going to show you first how to add the RSI to your trading view chart. In this case, I already have the RSI here, but you have to go to indicators, just time relative, and choose this one here, relative strength index. Once you choose this one, it will show you this indicator right here on the bottom. So basically the RSI, what it does is to analyze the price movement and speed, and it shows us here. And it is mainly used for traders to detect when an asset is overbought or oversold. But in this video, I'm going to show you 3 ways that you can take advantage of this indicator. So let's see the first one. So the first use that we can have with the RSI is to detect when an asset is overbought and oversold. And I'm going to show you here already this graph. So basically, when this purple line here gets above the 70 level, the asset is overbought. What does it mean when it's overbought and oversold? That it is highly likely that we're going to have a trend reversal soon. Not necessarily, but it's highly likely. And you can see here all the times that the asset was overbought inside this red zone. And I marked those moments on the chart here in red. You can see that the price was close to a local peak or already peaked. You can see all this level here. So it is very useful for that. And on the other hand, when it is below 30, it is oversold. So it is highly likely that we're going to have a trend reversal to the upside eventually. And you can see here all the times that this asset was oversold right here. So this is the first use, to detect when an asset is overbought and oversold. And before we continue, it's very important that you know that you have to use this indicator in confluence with other. Just when an asset is overbought or oversold, because even when the asset is overbought, the price can continue going up for a while. So if you enter a leverage trade short in the market just because the asset was overbought, you can get liquidated pretty easily. So you have to use it in confluence with other indicators. The same for oversold. Not because the asset is oversold, you have to start buying with leverage. The price can continue being oversold for a while. So let's go to the second use of the RSI. And it will be to detect possible bullish and bearish divergences. A divergence basically happens when the price is going one way and the indicator, in this case the RSI, is going the other way. So I'm going to show you here what I already detected in the chart. So first here, you can see how the price had a new lower low. The price was going down. However, in the RSI oscillator, the RSI was going up. You see here, price going down, oscillator going up. This is a bullish divergence. And in this case, the price starts going up after this divergence occurred. Let's see the opposite, a bearish divergence. You can see here the oscillator was going down, clearly going down, and on the price it was printing a new local high, or it was printing a new higher high. So this is clearly a bearish divergence. Oscillator going down, price going up. Most likely the price will go down after a bearish divergence, and it happened here. So this is the second use for the RSI, to detect bullish and bearish divergences that can potentially trigger a change on the price direction. And the third use for the RSI is to detect trend lines. What do I mean by that? Let me show you an example here. So you can draw, for example, supports and resistance lines on the RSI and detect when those levels are broken. You can see here on the RSI, I drew this line here that acted as support for the RSI. You can see here, it hit this line, bounce, hit, bounce, bounce, bounce. And when it broke finally this RSI support, that price went straight down. On the other hand, let's see here that this trend line acted as resistance. You see resistance here, and when it was broken, the price finally started trading to the upside. So this was the third use, to create support and resistance lines on the oscillator and check when those lines are broken. Alright guys, so I just showed you 3 ways that you can use the RSI to improve dramatically your trading results. However, personally on my day-to-day trading, I don't use the RSI all the time. I use our own private indicators, which already is coded with confluence of multiple signals. And it will look something like this. If I enable our trend rider algo number 1 and algo number 2, You can see how these red and green lines replaces the RSI overbought and oversold zones. For example, if price is below this green line, it would be that the asset is oversold, and if it is above, it would be that the asset is overbought. And our probable and take profit signals already includes multiple oscillators, potential divergences, and I just show you that on the chart with a very simple take profit and probable bounce signals. So this is it, guys. This was our RSI tutorial. If you want to access our prior indicators, the links are on the description, and don't forget to subscribe to our channel for more content and tutorials like this one.